Well, hard-pressed South Africans are keeping their fingers crossed that the Reserve Bank will reduce or at least maintain the repo rate. The Monetary Policy Committee is expected to make an announcement on interest rates this afternoon.
The repo rate is the rate at which the central bank lends money to commercial banks. An interest rate hike will be a major blow as consumers have been compelled to dig deeper into their pockets following a series of petrol price increases and a rise in value-added tax.
Our sister program On Point will take you live to that MPC briefing and when it happens. But for now, we're joined by our economics reporter, Arabile Gumede, to talk to us about the expected announcement. Arabile, we asked our viewers this morning if they're coping with the rising cost of living. What are your expectations?
Well, I certainly expect that the Monetary Policy Committee of the South African Reserve Bank will keep things on hold. The 7 members will certainly probably send out a clear message, however, that they're not trying to just keep things as they are, but certainly will wait and see as to how things will continue to flow for South Africa's economy. Of course, as you said, Desiree, as well, that there are increasing prices, everything from interest rates, the VAT increase as well. Food prices in and of themselves are certainly bound to go higher as well. The needs of government are very significant, but the important factor here is the fact that growth also sits at very low levels, and they'll try not to hinder growth any further, because all these increases themselves have been hindrances to growth also at the same time. So probably just wait and see for now and see how things develop as we go by.
But if it's increased, what's the likely effects on consumers?
Well, let's also remember that the real effects of an interest rate increase are actually only seen perhaps after 12 months or so. The immediate impact is, of course, the prices of whether it be your house, your car, or perhaps even savings, which actually is a better sentiment. So a lot of those who have savings and investments will want that the interest rates themselves do increase, which would help in that sense. But the overall impact seen in South Africa's economy will only be affected a little bit later on, and that is where consumers will be hardest hit, because all the prices would have then come in and would certainly be hitting their pockets the hardest.
Tell us about the factors that the MPC likely to consider when regards to the repo rate.
Well, the big one is, of course, inflation. They're aimed at moderating just how inflation sits at this point in time and ensuring that it doesn't go out of control. We, of course, have the target band, which is between 3 and 6% that government had set for the South African Reserve Bank. At present, it sits at 4.6%. The number just coming out at 10 a.m. yesterday. So it is still well within the target band, and it's surpassed the halfway mark between that target band of between 3 and 6% for the first time since December. We're now in July. So clearly things are a lot more contained. They're not as bad as they would be. But the question is, how far along will things go to becoming worse if they do? At the same time, South Africa's rand is of great concern and a big question, because that becomes a secondary inflation issue for the South African Reserve Bank. So at 13.30 odd currently sitting for the price of the US dollar, it does raise a few questions as to how far along things will get worse.
Arabile, thank you very much indeed for your time. Arabile Gumede is our economics reporter.
And for more on that development, watch the show coming after the agenda On Point. We will go live to the Reserve Bank.